Hey there, and welcome to a special bonus episode of From Wall Street to Your Street. I'm your host, Ryan Flanders, your financial coach who swapped the whistle and clipboard for spreadsheets and stock charts. Now, if you've been tuning into our summer series on behavioral finance, you know we've been diving into the hidden forces that impact how we think, feel, and act with our money. From loss aversion to recency bias, we've unpacked a lot, and there's more to come. But today, we're pressing pause on the psychology and doing something a little bit different. It's time for a quick market update, because while our brains are busy playing tricks on us, the markets have been playing a pretty steady tune. So whether you're out for a walk, commuting, or sneaking this in between kids' baseball games, here's what happened in Q2 of 2025, in plain English with just a dash of dad joke energy. Let's start with the scoreboard. The S&P 500 was up 10.9% for the quarter. The NASDAQ, a tech-fueled 17.96% jump. Not too shabby. Even the old-school Dow got in on the action, gaining 5.46%. And it wasn't just the U.S. International markets followed suit. Emerging markets rose more than 12% for the quarter, and developed markets were right behind them. Bonds also had a good run. That might surprise folks who think stocks and bonds never rally together. But when interest rates fall, like they did in June, bond prices typically get a lift. The big picture? Most investors saw green across the board, and not just in their lawns. So what fueled the rally? First, trade tensions settled down. A new agreement between the U.S. and the U.K. gave investors something solid to cheer for. Didn't solve all the world's trade problems, but it was a step in the right direction. But here's the real kicker, and this is where I want to linger for a second. Corporate earnings absolutely crushed expectations. Analysts were predicting a modest 6.6% growth for S&P 500 companies. The actual number? 13.6%. That's not just beating expectations. That's like going out to eat, ordering a cheeseburger, and getting a filet mignon delivered instead. And here's the teaching moment. Why do earnings matter so much? Because earnings, the profits companies actually make, are the fuel that powers long-term stock growth. Headlines may drive the day-to-day market action, but earnings drive the destination. And when all 11 sectors of the market outperform, that's a sign of broad economic strength, not just a hot tech trend. Jobs were also added, consumer confidence jumped to a 4-month high, the unemployment rate stayed low. Even with everything going on around the world, people are still spending, companies are still hiring, and growth, while not explosive, is steady. The Fed didn't move interest rates in June, but markets are starting to bet on a rate cut sometime in Q3. And whether that happens or not, it shows how expectations are shifting toward a softer, more accommodative policy stance. Of course, it wasn't all sunshine and rainbows. There are still risks out there. Tensions in the Middle East flared back up, and political uncertainty in Washington, especially around taxes and trade, continues to loom. But here's the takeaway. Strong earnings, healthy economic data, and cooling trade tensions gave investors plenty of reasons to stay optimistic. So what do we do with all of this? Simple. We stay the course. We remember that markets move in cycles, but long-term plans are built for seasons and not headlines. And if you're enjoying these episodes and learning something new each week, don't forget to check out our ongoing behavioral finance series. We've got fresh episodes on recency bias, herd behavior, and some real-life stories that you don't want to miss. I'm Ryan Flanders, and this has been your Q2 Market Pulse, from Wall Street to Your Street. Talk to you soon. Securities and advisory services offered through Commonwealth Financial Network. Member FINRA SIPC, a registered investment advisor. Fixed insurance products and services are separate from and not offered through Commonwealth. The Flanders Group is located at 221 Maitland Street, Bel Air, Maryland 21014. Phone number 410-569-4506. Investments are subject to risk, including the loss of principal. Some investments are not suitable for all investors, and there is no guarantee that any investing goal will be met. Past performance is no guarantee of future results. Talk to your financial advisor before making any investing decisions.